Volatility picking up the last couple of days in the market. Today, the S&P 500 opened up around the 6,400 level and quickly sold off all the way down to the low 6340s before finding some support and actually rallying almost all the way back up, ultimately closing down 0.24% at 63.9578. We've been discussing the 50-period EMA on the 15-minute chart rolling over. That's this red line here, and you can see after the rally this afternoon, we came right back up into that level. So we're at a very crucial spot in the market, at least as far as a short-term time frame is concerned. And so our view is generally if we are below this 50-period EMA on the 15-minute chart, that tells us that sellers are generally in control, at least in terms of a short-term downtrend. So we'll see how the gamma exposure picture opens up tomorrow. A lot of negative gamma exposure rolling off at the 6,400 strike. You can see most of this is zero DTE gamma exposure that's going to be rolling off come tomorrow morning. If we scroll up the options chain, we see gamma exposure is still concentrated at the 6,500 strike and skewed higher. So market participants continue positioning for higher prices in the options market towards the end of the year. The volume in the options market, however, was skewed to the downside. This is today's options volume by strike price, and the volume was primarily below the 6,500 strike. We did get a close in negative gamma exposure territory, however, just barely so. The last two times we dipped just below the zero gamma exposure line, we did see an immediate bounce in the market. And so we'll see tomorrow and into Friday if we do get a bounce. We really are at an important inflection point, and we're going to continue monitoring this in real time on our gamma exposure dashboard. You guys are welcome to join us in our Discord community. We're going to be discussing this live tomorrow. I'll put a link in the description below.
Thanks, Anthony. I have the VIX pulled up here. On the daily chart, we had pretty high volume, even at the 55 strike, 45. Of course, most of the volume was around the current level of the VIX today. We did complete VIX expiration this morning with the expiring contracts settling out around 15.5. So in our newsletter yesterday, as well as in Discord, we were commenting on the close of the VIX above both the whole moving average and the 9-period SMA, and that was the first time that had happened since August 5. And sure enough, we did see follow through today with that bullish volatility signal. Now, what I'm watching at this point is that we are still above both of these averages. So the risk is to the upside for volatility. And I think market bulls need to be a little bit careful before jumping in with both feet, given that the VIX is still on this buy signal. So if we can get a close with the VIX back below 15 or even 14.5, that would be a much more bullish signal. But as we've been pointing out, with the VIX at this area that's represented support virtually all year, it's hard to envision the VIX staying below 15 for an extended period of time.
Thanks, Sean. Next, let's take a look at GLD, the gold ETF, up 1.01% today, closing at 308.36. We're still in this larger consolidation zone between 300 and the 317 level, give or take. GLD continues to find support at the 50-day EMA. That's this red line on our chart, and this is going back to 2024. The 50-day EMA has been a really strong support level, and we've just been consolidating just above that level over the last several months. The gamma exposure picture, however, is skewed positive with the 320 strike, the largest gamma exposure concentration, and we've seen a lot of volume coming in, especially over the last few days at the 315 strike and above. Today, over 40,000 contracts at that 315 strike, and we even saw nearly 30,000 contracts at the 330 strike. So market participants do appear to be positioning for a big breakout in the coming months in gold. And we continue to play multiple strategies using GLD in our portfolios. One of those strategies is a weekly income strategy, and we actually have a sub-thread in our community Discord specifically for these trades. And our most recent trade was last Thursday, and we actually rolled the short leg of our diagonal out to this Friday's expiration, selling the 310 puts for $4.15. Last I checked, those 310 puts are going for about $2.19. So we currently have an unrealized profit of over $2,000. Ideally, what we want to see is a little bit more upside in gold over the next couple of days, pushing towards this 310 strike, which case we'll lock in gains on those short 310 puts and roll out potentially out to the 315 puts in the next week's expiration. So we've been running this weekly income strategy on GLD for several months now. We're averaging just under $1,000 a week over the course of that duration. And I think this is going to continue being a solid vehicle for upward momentum up into those higher gamma exposure strikes.
I've been covering IWM quite a bit recently, but I wanted to point out that DIA is actually showing pretty amazing positive divergence relative to the other indices, and it's definitely holding up a lot better. You can see on the daily chart, I have these same moving averages we were looking at with the VIX, the whole moving average and the 9-period SMA. And even with the attempts to sell off, DIA has held above both of these lines, and the lines are pointing upward. They look bullish, and DIA still has positive GEX as well, which is not seen with the other indices. So we have 455 and 460 as the largest GEX clusters on the map. Both, of course, are higher than the current price. And so I would really take a closer look at the names that comprise DIA, and DIA itself as a possible vehicle that may see a spike. So we see some eye-catching outperformance from DIA recently, and I think it's worth a closer look.
Thanks, Sean. Next, let's take a look at Palantir, one of our favorite gauges for risk on sentiment in the market. Today was down 1.10%, closing at 156.01, but that definitely does not tell the whole story. Look at this candle following yesterday's massive sell-off. We were down in the low 140s at one point today and as high as the 160 level. So a massive, nearly 20-point candle on Palantir. Really wide trading range, and you can see how buyers stepped in big time today. And this is right at the 50-day EMA. 50-day EMA sitting at 154.29. So really interesting price action surrounding a major support level. The gamma exposure picture is skewed higher when we look at our chart. All the GEX is from 150 all the way up to the 200 level. And we've been highlighting Palantir in a couple of our recent videos looking for a little bit of a pullback. Well, we certainly got that over the last 6-7 trading sessions, culminating in today's trading. So we're going to be looking at putting on a strategy in Palantir. We're not expecting it to shoot back up in the next few days up to highs or anything, but I do think there's a really great opportunity to collect some premium and maybe even put on some out of the money call debit spreads for later in the year. So we'll be looking at a couple of strategies for Palantir. By the way, if you guys are interested in tracking our trades, you can become a member at geeksoffinance.com, link in the description below.
Thanks, Anthony. Let's take a look at Adobe. I wanted to just start out with a brief look at a longer term weekly chart. So you can see that it's been in this pretty pronounced downtrend since the top in early 2024. So it's been heading down. We have a possible, double bottom sort of scenario here. But I drew this line through what I feel represents, pretty solid support. I guess we'll see if other buyers also agree with that. So let's flip back over to our GEX dashboard. And I just wanted to point out that, the whole and the 9 SMA have turned higher here. And if you go back and you look at previous times where we saw a pronounced turning point with these moving averages, I don't see very many fake outs. It looks like every time we've seen this sort of a turn, without even predicting the end of the downtrend, which I don't think is necessary, you can see there was at least a period of time where price moved higher. So each of these instances, we do see pretty big GEX at 350. We also see a big GEX cluster at 400 and not a lot in between. So if Adobe does get going here, we could see 400 reached fairly quickly, but I think the setup is here for a possible turn and a positive move.
And for a limited time, you can get $300 off our yearly portfolio manager tier subscription. Use code SUMMER2025 at checkout. We just extended this promotion, but it will be ending pretty soon, so take advantage of it while you can. We've got a few spots remaining. Members get access to our gamma exposure exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our Discord community. You can track our trades in real time. I'll put links in the description below to all of that so you guys can check it out when you get a chance. Thanks so much, everybody, for watching. We'll see you guys in the next video.